Hi everyone, welcome to this time Fluctuating Finance. Well, last week was full of changes. Bond yield curve didn't go down as expected. Meanwhile, no economic data or financial data came out. China's bonds market was fluctuating within a 3 basis points range. So, as usual, let's have a whole picture scene of the bonds market, then check out the details part. Alright? Total bond yield curve went up and was a bit of twisted compared to last week. Yields of 3 years term went down 0.7 basis points. 5, 10, and 30 years terms went up 0.4, 0.7, 1.2 basis points. If we compare to the one of December 9th last year, the curve was still twisted and flat. Yields of 3 years term increased 0.9 basis points. 5, 10, 30 years terms went down 8, 27, and 26 basis points. The spread between Chinese treasury bonds and commercial bank perpetual bonds almost remained at the same position, with 5-year spread was 46 basis points. About the actions of investment agencies, for short and middle-term bonds, funds bought 46 billion yuan, joint stock banks sold 40 billion yuan. And for the long and ultra-long-term bonds, funds bought 42.7 billion yuan, whereas joint stock banks sold 43.5 billion yuan. Next, let's check out the details part and see what happened last week. In terms of fundamentals, the most important role in influencing China's bonds market was the performance of the stocks market, which has risen for 3 consecutive days last week. And the extent of going up looks stable and attractive. There were 3 reasons for that. First, Guotai International has been approved for virtual asset trading services, which definitely benefits capital to flow in or out between the domestic market and the international market. It also provides great help to the cryptocurrency situation in the country. Second, Iran and Israel announced to ceasefire officially, which gave China's economy a little safety feeling from the outside environment. Third, about after 2 months reeling at the bottom of the tariff issue space, the risky emotion in the stocks market has accumulated, grew up, and made a short breakthrough, although it didn't last so long. So these 3 reasons made the stocks market up last week and overwhelmed the bonds market. Thus, from long and ultra-long-term view, China's bonds market hardly has a clear downward trend in this no-data verified period of time. Bond yields may wander in this place for a while and could have some small adjustments. For funding conditions, the PBOC invested liquidity in the interbank market generously, with 300 billion yuan MLF and plenty of OMO. The total volume of which was far beyond the due one, but the financing price for non-banking agencies was not that kind. The price for crossing over the Q2 was around 1.8% to 2%, which was expensive compared to a regular crossing month period. We can say the attitude of the PBOC to the bonds market stays loose, and there isn't a logical and a reasonable intention to squeeze liquidity from the bonds market. So from short and middle term view, China's bonds market surely has some buffers from the loose funding condition in the near future. Am I right? So what should we pay our attention next? First is the economic situation. While China's economy definitely has a strong resilience and seems like it has been out of the worst case already, so maybe the economy will show some good signs from data fields. Then the fundamentals stays against the bonds market. Speaking of this, let's now put our eyesight on PMI data released next week to see whether it gives us surprise or not. Next, funding conditions. The PBOC will highly remain loose attitudes to the bonds market, so we should notice when the PBOC resumes treasury bond purchasing, which will lead bond yield curve to go down again. Third, international situations. Like I said before, the theme of nowadays world has changed from peace and development to conflict and confrontation. So be careful of this. Chaos may appear anytime and raises risk-avoid emotions all over the world. About bond investment strategies, now maybe we should cut some long and ultra-long-term bond positions. For the China's economy is going better, but we have to leave some of them to hedge the uncertainty from outside. Short and middle terms have low risks and short duration, which would be a good choice to hold them as a base position. Anyway, the core thought is cutting a small part of your DVO1 and lowering the risk exposure in Q3. So as always, if you want to know more useful finance information about the Chinese bonds market and the economic situation, please like, share, and subscribe. I will always be here, share my understanding and experience, and waiting for you. So bye guys, until next time.